Video 2 of 3 on 223. Here we go, starting with EW. It looks like it could pop. It looks like it could... What? That was weird. It looks like it could pop up towards 75 or 76. And good support at 70.5, better support at 68. Lose 68, you go to 64, which is much better support. Now let's look left, and you can see these boxes were from earnings reactions from past times. Look at the one box, that giant box. That is one day. In fact, it is one moment in time. They reported earnings on in October of last year. That's the width of the move for that one headline. We're still inside of it. So like I would have said, what does it take to take out a candle like this? It takes weeks of battles and then fail. Weeks of battles and then now failing. I challenge them to get to 78. I think it's easier to drift lower and confirm support. So next time it falls into support, deploy some sold puts. If it has enough... Yeah, I'm going to put an alert. No, an alert. Huge support from 10, 20, 24 earns. You get the point? You're stuck. Solid buyers and a lot of sellers. FANG, oil company, I believe. Good base. You might get to 166, maybe if you're lucky 171. As a trade, I would be out at that area. So 170 plus or minus, it would be my exit. You want to know that you want to know that they won't lose 152. If they lose 152 and then 150, you confirm like 140, 142. Basically, let me see if I can visualize it. All right, perfect. I think I can. Watch this. From here, a huge rally, fail, and produce the lower low. That is possible. I'm not saying that that's the forecast, but that's what you're looking out for. You can bounce. Take advantage of the bounce. So what you want to avoid is the bounce and the failure, and then this. The wonky arrow. That's what you want to avoid. You do have support. Earnings in the day. So never mind. Nothing matters. Everything I just said doesn't matter. I should have looked first. FedEx. It needs a bounce. Otherwise, it's going to drift lower into the earnings. I think last time they reported, they said that they're breaking up the company. Look at this level. They've been fighting for it for so long. I mean, look at this P&L. Pretty boring, right? Look at the stock. That's why I don't trade it. So when I trade, I like to sell risk. This risk is not priced in to the level of volatility the stock goes in. In other words, if you have a driver that is a crazy driver, you charge him or her high premiums, right, of insurance. Okay, that's the options prices, the premiums for insurance. Well, this one doesn't pay those premiums, and it is a crazy driver. So it's like a crazy driver getting a discount on the premiums. You don't want to be the company that sells it to them. That's why insurance companies don't sell insurance, fire insurance in Laguna, because it's burned down 2 to 3 times. So they said, no, you're liable for that to happen. We won't even charge you any premium. That's how high the premiums are. They're not there. They're infinite. So why is it like this? I wouldn't touch the stock for all the money in the world. I can help you trade it on the earnings, but it is a buy the dip, a lot of support. I would sell the rip if it comes. That's basically what I'm saying. If it spikes, exit as a trade. FE. What is this one? Oh, First Energy. I was looking at this, an iron company. Not an obvious entry point. They are coming back to a point of failure, and there's a prior support zone that would inspire a dip. It would be better at 41. Earnings in 3 days. Whatever I just said won't matter much on earnings, and you don't need to come to me during the day of the earnings. I doubt that this will have any hints, but we will look at the options if it has them. Maybe we're lucky. Foot Locker. If I'm an investor, if I'm an investor, I would never consider investing in this a stock like this. What does it have? Nothing. It's like I don't know how to say it without insulting people. The industry is not booming. Are we agreed? That's why we only have one store. So the only reason it's doing well because it's the only store available still. So from an investment perspective, this is not a bad place to start because it's been here before, and every time it's been a pretty good run, and it's been bulletproof for a long, long time. That's like more than a decade. So the zone as an investment starting point, solid. If that's what you're asking about, you have my permission. And technically speaking, you have buyers below as well. So if I just got long here, I'm okay seeing pain down to 15. In fact, if it approaches 15, it'll make an even better entry point with a stop as a trade. The problem is 23 or higher, heavy sellers. 25 or higher, heavy sellers. 28 or higher, heavy sellers. So make sure if you're trading it, not to forget to exit on the spikes. First Solar, same concept. If I were to invest in solar energies companies, this would be it. That would be the company I would invest in. I think they have the best balance sheet. I'm a customer of Sunrun, and they don't know what they're doing. I had a run-in with them this week. The guy showed up to my door and shook my hand and said, "Here's my text. Here's my phone number. Text me." I did nothing. I did twice, nothing. He was at my door. Anyway, so they don't know what they're doing. These guys seem a little better. 2 days, earnings. Come to me the day of the earnings before it reports. There's probably information in the options chain. As an investor, I'm not exiting when it's falling into a support zone, but I'm not adding either. GE, if you twist my arm, I would sell naked calls. I did that. I said that too. That's the story. So earlier, if you watched the first video, you heard me say I'm short Boeing calls. Well, the way that happened in the live room, you can ask the 300 people that were there, is I went to sell GE calls because I wanted to short it like I did last year. But this year, the options premiums for the calls are nowhere near the option premiums for the calls last year, which means the market makers are not as enthusiastic at it as they were last year. I couldn't find good premiums to sell in GE, so I went to the next best thing, which is Boeing, because they were both moving up on the same day. So had I done that, I would have already booked my profits because this was a perfect drop. This stock, and it's a controversial opinion, it seems to me, but it's a common sense opinion, is overpriced to high heaven, and I mean it. I know it's a new company and all, but that's my point, because it's a new company. My thesis is simple. The sales are not there. It's a turnaround company. It's overpriced. I can't tell you its valuation because I don't know what the new company is. This P&L is either lying or inaccurate or something. But anyway, time will tell. I think this company has, if the markets collapses or corrects 15, 20%, God forbid, this company can be, this stock can lose $50 like this and can be cut 40%, like Amazon used to get cut 40% once a year in the past. It's priced like a mega grower, and it isn't. Support zone through 160, solid. You better not lose 160 because I don't think 148 will hold, and it will go straight to the 120s. So that's a better short than a long. This GE, the one that's left over. GLD, you saw my point. I'm short with a stop. That's a technical short against the chart. That's it. Gold should be higher in the future. This is, I'm basically trying to time a dip like this. And I forgot how we did it. Buy a put or buy a put spread or sell a call or call spread or a combination of those. I do have a stop in mind. It hasn't triggered yet, but it's a very delicate I'm trying to capture point A to point B, so a dip towards 158. That would be a pretty good win. Not crazy. So if I'm long gold, I don't even need to get out. If you're accumulating gold over time, you're just entered at a good price. If you're loading up on gold here, I don't think that's the right thing to do. Nibble, yes, okay, if you want to, but where's the rush? It's never been higher. Well, it could go to 280. Yeah, but you waited. It was 30% cheaper not too long ago. I don't know what this is. GLOB. Oh my gosh. What is this? Globant. Information Technology Services. Yeah, that's what it is. Information Technology Services. I don't know what they do. Let's stock chart. You do the homework on the fundamentals. A drop this big usually is not for no good reason. It's a little bit more than just sentiment. And on the problem is, if you lose this one, you will end up at 100 or 98. Technically speaking, that's a massive head and shoulders, I would imagine, with downside of, I don't know, 35 to 40 to 50 to technically $100 from there. So that would put it at $50. Clearly, mathematically, that seems like a pretty steep price. So I wouldn't aim for it, but I would say maybe they're not done selling. And if I'm long the stock, I would use bounces to exit unless I know why they fell and I disagree with it. For example, if the reason they fell is because they missed estimates, that's not a good reason to say it's going to fall more. I would buy the dip. If the reason they fell is because sales got cut in half, that's a good reason to worry about. Or if they said our sales are going to drop off a cliff, that's also worry. But if they're adjusting estimates and it's all about the opinions and not the facts, ignore that. But if the facts are broken, don't be a hero. Alphabet, I would have shorted it at any point in time. In fact, I said it's an outright short. I think if you rewind a few videos before, it's an evil company. I am convinced. Yesterday, I had proof that they are listening and sharing information across multiple other companies. So I just don't trust them. Technically speaking, 175 would fill a gap. One would think that they would have support. I think there's another gap down to 170 that you can't see. So it could be drifting towards 170. 170 or so would make a better spot to catch a falling knife. But in this ascending channel, and assuming the markets continues higher, that's a good spot to catch the falling knife for a swing. I think it's best done by selling something, a put spread or a put. I would even consider an iron condor. Like if I sell a put spread, I would sell an aggressive iron condor too, because I think it's going to take a lot to break out of 196. It would follow NVIDIA higher, but I don't think 1-to-1, like say AMD would maybe. So we'll see how that works out. I'm cautious with the Alphabet team. Amazing, nice work. So to give you levels, 186 is a sell zone. 188, a better sell zone. Resistance. So let me see. I probably have lines. Watch. If I put, okay, resistance zone up here. Above. Top. And it starts at 186. So if you want to do this, you can. And up here, short. I would sell credit call spreads of sorts. Sold calls, covered calls if you own shares. Great company. Don't sell your shares because of what I'm saying. I'm just saying that. Trading comments. Supports through 165. Better. Now, all these lines, they averted disaster back then. So to be honest, I will do this. And don't be like, oh my gosh, we're falling apart. No, look left. This was an earnings reaction from April that we just fell into. This whole orange box. Why can't I select it? There we go. Is one candle in one instance in April of last year. Just to let you know how pivotal this zone is. So there should be a buyer somewhere in this zone, right? Scattered. Okay, so the strongest one would be around 170. give or take $2. Another massive one is around 162, 3, and 4. Now, if you lose those, I think it's an easier trip down to 150 and 145, but you have stronger buyer above. A good company, buy the dip, yes. You could nibble here, but if I'm long, I'm not adding. Friday, I sold the credit call spread. Oh, nice. Good job. That's the best way to do it. You buy a put and you sell a call spread when you have conviction. Who is this? Goldman Sachs. I would be short Goldman Sachs, but I'm short JP Morgan. Therefore, I'm not short Goldman Sachs also. Because Goldman Sachs, JP Morgan, Berkshire Hathaway, I would short any of those three. They're all top components of the XLF. And I opted not to short Goldman Sachs because they do all kinds of shenanigans and they're sharks. They're so, like, it's a black box. You never know what they're doing. They put themselves in good spots. Like during the pandemic, you know, they got money from the government, they got money from people, they sold insurance. They sold, back in 2008, they sold a bunch of the junk, and then they bought insurance against the junk they sold, kind of a deal. I don't remember the exactly what they did, but they basically sold a lemon and then insured themselves against being sued about having sold a lemon. So somebody else was on the hook. It's just brilliant. I don't want to short them. So I think it's easier to short JP Morgan than Goldman Sachs. 600, 580, 560 areas where you will find good buyers. I think it's a sell the rally mode. I challenge it to make another high this year. In fact, if it approaches 652, it is shortable. I'll put an alert. 636, it should hit a lot of resistance. If I'm long the stock, just sell covered calls. It pays a bunch if you want to own it for the long term. If you want to short it gently, sell a credit call spread, buy a put spread. It doesn't take much out of pocket, and the opportunity is awesome. Okay, GitLab, earnings in 8 days. This company seems to have a good strong growth path, but it's one of those like Palantir-ish like stock where they rip through their they reinvest in the company for hyper growth. I like companies like that, like old Amazon. Look at the operating costs. So hopefully they can control that. This is harder to control. Watch Rivian. This is easier to fix, maybe. Depends on the company. Let's see what they do here. Software as a service and subscription. I like the subscription model. Look at the size of it. So that's, the sales are solid. Don't short this company. Buy the dip as an investor. Good growth, as long as it's not burning cash. I mean, they have negative cash this year, so keep your eye on it. You don't want them to be in the need to borrow money or issue shares to borrow money. Price to sales is 16, heavy compared to itself, but it's not outrageous, like Palantir at 105. I can see it falling through 61, and it would be buy the dip. You see these boxes, T1, T2? I didn't notice that. I just saw it. So they hit T1 and almost T2. What are those? This big red W on my screen, those are the targets of that. Okay, so now we have a green M on my screen, which is inspires pops. So here's the thing. If it pops above 68, there's no need to come to T2. I would call that done. If I was short because of these two targets, I would be out. There's a bounce coming. If not, I would comfortably sell puts to own shares in the stock. In fact, I'm going to put it on my trading list. Now that I've looked at its fundamentals, the subscription service gives me some sense of comfort that they have incoming business that they can rely on in order to grow the other business, whatever else they need to do. It's a good bit. Support below, sellers above, going into earnings, going to be wild. Helix Energy, man. Okay, so little sentiment on my part. I couldn't stand the pot stocks back then. I covered them really well, but they bothered the hell out of me because I smelled a rotten fish there, and it turned out to be real. It was just bogus. The whole thing was bogus. Quantum computing, I got the same sense, and it turns out also bogus-ish so far. This energy thing with the nuclear part, I bet you it's going to be another bogus one. Everybody's excited about the nuclear energy. If it was so easy, everybody's going to do it. So everybody's going to have a nuclear energy company or something. I don't know if this is one of them, but energy stocks have gone bonkers. I don't know what to do with them. So stick with the dollars and cents that you know. These dollars and cents are not that bad. 1 day until earnings. So that's going to be interesting. The bounce needed to happen. It can still happen, but they keep lowering the bar. So at the beginning of February, I would have imagined that it wanted to go to 950. But now I would say the same setup. It wants to go to 870. So they lowered the bar $1. They could come down to 720 if they lose the support they just set. And that, actually 750 or lower, that would be a really, really, really old target that they have avoided for months and months. If you're a buyer of this company, I think if it gives you a 750 entry point, assuming the story doesn't change, that would be a good entry point. Meanwhile, it could pop, but they lowered the bar $1. Hood, I would have exited with no hesitation, like not even a blink of hesitation. This P&L is garbage for me. A company that delivers this kind of numbers, if this is accurate, my gosh, I would not trade it for any money in the world. I was in the stock a while back. I exited too soon. It was a nightmare. Okay, so I don't understand this. Somebody buying it here. What is the thought process? Please let me know. You were in the pandemic and we were here, and it took it since the pandemic to get back up here, and it has rallied, I don't know, 75, 80% in a couple of months, and then you choose to buy it up here. This is the ultimate example of nope, not an obvious point of entry. It's not an insult to you. It's just, I want to take a trade that, number one, what's the number one rule of investing? Don't lose money stupidly. Well, whenever a stock takes that long to get back into a stupid crash, that's the definition of, hey, this could be stupid again. Not an obvious point of entry. 44 makes a good shelf. There might be some support at 48. 44 is better. 34 is even better. 38, you can argue for it as well. The best breakout zone I see is in the 20s, like 28 to 26. So let's just say under 30, you could convince me if the P&L continues to be okay. But I just mentioned other places that might be interesting. If I bought it at 62, I am not adding here. I'm not adding until it hits 42.3. If that leaves room to add more, because there is a chance that this one is in the 30s again this year. Pretty good chance. Hormel, they're losing support, so they need a bounce soon, and earnings are coming. So they need to be at 32 or higher. Otherwise, they could get to 26. That's as easily as I'm saying it. They need to be at 32 or higher to avoid 26. Earnings are coming soon. IBM, am I short? I think I am. I gave you a short. I'm going to add to my short because I looked at my portfolio and I don't think I found it. So I need to sell calls in IBM till the end of the year. Maybe I did. I have to double check. So if you come to me and say, hey, trade this, I would sell a call or a call spread twice this year, or once for December and walk away from it. And then I would choose to add a put spread to capture some downside. This is an unbelievable stock. I'm impressed with the stock. The exact opposite statement about the company itself. The most underwhelming mega cap ever. I mean, it's solid. It brings in the money. But what? They were like the king of AIs. Remember the chess guy and all of that? What? They're not even in the game now? Maybe they are, maybe they aren't. Anyway, IBM, I would sell a call spread, buy a put spread, a combination of the both. As an investment up here, it's less than exciting for me. The markets are high. This one is at a high, floating on air. Even at that point here, 225 would make it a more logical visual place. I was like, okay, if it falls to 235, 225, it makes more sense. How about if it falls to 195, would make more sense if we look left. Not an obvious point of entry. Okay, that's what I'm gonna say about it and leave it at that. Oh, that's interesting. Okay, that's broken, that red thing, so don't trade it. Just a very strong stock and puzzling. I'm not sure why. JetBlue. A lot of resistance above 820, 840. More resistance at 920, 940. So $1 and then another dollar. A lot of support. So the stock should do nothing. It's stuck between buyers and sellers. As an investor, you should hold it with confidence. If you want to own the shares, buy half. And if it crashes 30, 40%, add the second half and call it a day. JP Morgan, I'm short. I could have locked in some profits if I wanted to. My credit call spread is still under pressure, but it's now statistically viable. So the options chain suggests that the credit call spreads that I shared, which is a bear call spread at 275, I want to say from memory, is still the buyer of that call spread now has the onus to beat me. I'm winning. Even though I'm losing money, my odds are winning. So I will keep a close eye on it. If it gets under fire and you need help, send me a message, pop into the live room, and I'll share with you a method to get out of trouble. Meanwhile, 275 is a very important spot, which is where I sold the call. And it's actually an open fair value gap. So it's significant on the chart as well. 258, 256 is important. 250, 246 is important. Let me see if I'm consistent with my comments. Yeah. So if they lose this spot at 261, they're probably going to finish one of these three arrows. These are possible targets. So this is a big if, okay? So this arrow gave us the target, but they took one last burst. And also I want to focus the attention on this tick that happened here. That's an unusual tick. So on that day, pre-open, it looks like it gapped up, opened at 281 out of the blue, and closed at the very low of that gap at 280, and then proceeded to correct. So keep that level in mind just as a potential top for a while. I don't know. We'll see. Pretty aggressive market. So pretty aggressive bounce. All right. So this bounce should have happened at a higher level. Like it should have happened from a base of 30 to go to 33. Remember earlier I said 2 tickers ago, I said they lowered the bar, and it seems that they lowered the bar here. So this will be now at 31.5. It would be my target, 32 tops. If it gets to 32.50 as a trade or 33.50, I think it's going to find a lot of sellers. So if you bought the dip and you made money for a trade, I think you should lock some profits. Look left. No, more left. More. What do you see? I had a target from months ago. This is the level that they entered. And you should be funny, you can hardly see it, but there's a little dashed white line at 26.50. That's a statistically significant line based on Fibonacci because it's an automatic line that's drawn by this harmonic. And that's my arrow. I didn't mean it that way, but that's how the eyeball works with the Fibonacci levels. Machines look for that stuff. That's why they work. It's a self-fulfilling prophecy. Check out this white line. It's going to be important here. So what I'm going to do is I'm going to repurpose this white line and put it where I think there'll be sellers in size. Coca-Cola. I just reshorted. Because what? Jesus. It's Coca-Cola. And they sell sugary drinks. And we have Kennedy who wants to not do sugary drinks. I forgot why they popped, but I'm pretty sure they had a real reason. I don't know, pot infused Coke. I'm kidding. I don't know. All I know is it's going into a prior fail where we shorted it and made $1 zillion. We're going to try to repeat it. So the trade is simple. I bought a put, I think. It's as simple as that. I don't think there's enough premium for me to sell a call. And there's no earnings. So we'll see how this plays out. And if I lose 30% of my money on that put, I will exit and still have enough to spare from the last win on Coca-Cola. I think it's worth it. It's definitely an exit spot where it's at, not an entry point. We'll see. KRE, I'm also short this stock by selling calls. Like, you see that resistance zone? So I said, I don't know if they're going to fall, but I bet you they're not going to rally. And that's what it means to sell a call. It's like shorting the stock at a higher level. It is making money. I haven't looked at it, and I'm not going to look at it. It has support. It's scattered through 58. If you lose 58, I think you go to 54. So let's see if we can move some of that, some of those lines. So we'll put some new lines that we can trade here. Like, you do not want to lose this one. Must hold, should hold. And if it doesn't hold, let's see if we can give you an extension. I'll give you 2 different targets potentially. Now this is if, right? It's not like, oh, this is what's going to happen. We're looking at corrections. If this is a correction that's going to take hold and have targets, these would be them. And it's going to be into these 2 red lines, which were huge pivots back then, so they should be good supports. So now you can tell the damage. Okay, if you just bought it, worst case scenario, you're going to fall a few bucks and hit support. Don't add. If you bought it at 65, I wouldn't be adding here. I wouldn't be adding at 58. I would be adding if it goes to 55 or lower. What? That's too far down. Exactly. You want to make it count. You want to make it, you adding, the goal of adding is trying to lower your entry price on average over time. Adding too soon, you waste a bullet. If they take out 66, they could push against that. I would be shocked. I would add to my shorts. I'm winning now. If they go up there, I would make my position larger. Lily, this is an exit point. I think Lily goes to 800, 820, and then maybe 790, 780. I don't trade Lily. All I say, it's jokingly, I say freaking Lily because it's just a monster stock. How about this? Can I tell you that it could be at 1100 in the next 3 months? Even though the chart says it should go to what those 2 numbers I told you. If you told me it will be at 1100 in the next 2 months, and I'll say, yeah, okay, I won't fight you on it. Watch it. They broke out from 850. They broke out from 850, purple. They confirmed it as support. This whole thing is a flag. And I'll zoom out and you'll see it. If they break out, the size of the flag is as big as where we came from. Let's see if I can give you the size of it. Good Lord. Okay, so this is the upside potential. They can do this with relative ease. The size is up here, but we won't say that. So what we're saying is the bears better bring it down below 840. That's what we're saying. Otherwise, you're risking a breakout. Another area of importance is just below 800. And of course, you need to hold 700. If you lose 700, the opposite happens. It goes to 560. MasterCard, don't short them. They're big contributors in the XLF. If you want to short MasterCard indirectly, short the XLF. It's a cheaper put. It's like $1 versus, I don't know what it's cost. Look at this P&L. What may hurt Visa and MasterCard is if we pull back on spending online. So if the consumer is going actually into a recession, like spending recession, these guys will get shellacked. They seem invincible until they're not, and then they fall out of bed. So Visa and MasterCard. I don't know what you're asking me here. Short them? I would short the XLF instead. If you tell me the market's correct in the next 6 months, I tell you this one will probably challenge 420, 430, maybe even 390 in the next 6 months, 8 months. But there's no way it's going there on its own. Like, no way. Okay. Pivotal points. 510 to 500 should be solid buyers. Not to mention 530, good pivot. Not solid, good. Really good, 510 to 500. Amazing, anything below 480. Awesome, anything below 450. I'm like, what? That's a pretty good entry point. Anything below 420. All right, and then the moon, of course, is available. MBLY. Pretty weird what they decided to do. I questioned the leadership. I questioned their sales. I don't know a lot about them. I'm using logic and my engineering know-how to tell that there's something rotten in here. Why does a company, it's, okay, not quite the same, but a similar logic. Like if I'm Apple and my iPhone kicks butt and I decide to start developing an Android just in case I'm wrong, and then I decide, no, I'm going to throw away $1 billion or 1.3 billion. How much did they throw away here? Yeah, 3 billion. They wrote down 3 billion. Like, oh, okay, no, I don't need to do an iPhone, an Android. My iPhone, it's just fine. It doesn't inspire confidence. Good support below 15, better support below 13. Sell puts the own shares all week, every week until you get assigned your shares. Yes, you can be invested in it for the long term. Not a bad thing. What you want is for them to get to 23 because then they can get to 28, 29. Now, if this was an investment and you were buried in it at 24 and you didn't exit with this rally, I don't know what to say. If I had bought the company stock here because I was excited they're doing LiDAR and eyeballs, and then it falls down to here, like, oh my gosh, I lost more than half my money, and then I don't get out here, I don't know what to say. I would have been out. So that's the huge problem now and the opportunity. But take advantage of the opportunity. McDonald's were short and we're making money. It did have a good day on a bad day in the market, so that's solid. We're short up here, so we don't need it to drop. We just need it not to rally. The reason I sold the credit call spread because it's been failing there consistently, looking back, and the market's at all-time high, and it's at the upper end of the range. So not that this is an official range, but if they don't take that out, like this one, they might have a descending channel going on. We'll see. I don't know what you're asking, why you're asking. I think it can revisit 298 and 292. If they pop above 312, I would reshort it again if I wasn't short at 316. Marcus, no, I was going to say Marcus and Millichap. It isn't. Microchip. Why is Microchip down, down, down when it's all about technology? P&L is okay. That's weird. So I would tell you the zone into 70 is an exit spot. 72 is a short. I don't know what's going on. You need to know what's going on. If you were buried in it and this rally came, it's an opportunity to exit. This is clearly not a fan favorite on Wall Street. Anything above 72 is difficult. Anything above 78 is a short from a chart perspective. MELI, buy. So this is Mercado Libre. I'm assuming it's a focus. They know what they're doing. If you look at their P&L, the sales growth is insane. So I don't mind stocks that are parabolic like this when they're actually parabolically broken out as far as sales are concerned. I get concerned when their price to sales are pretty high. And to be honest, I don't know if I trust this price to sales metric. But if it's single digits, really, then don't short it. I don't know where it goes. The chart doesn't look inspiring for more upside, but don't short it for no reason. If you have the ability to sell credit call spreads in it, it's a big stock. I don't think it's very liquid. If you can sell credit call spreads to buy debit put spreads, that's the only way I would consider shorting it. At the risk of losing a few $100 and making a few thousand, that would be worth it. It's a huge move, but that's because they grow very, very aggressively. Speaking of aggressive growth, Meta. What's going on with Meta? It's been like 3 days since it had a green day. Mega Meta is one of the things we're watching to see risk appetite. Palantir, TPR, Meta, AutoNation, UAL. This cocaine bull, as we labeled them, the bullish thesis that is so bullish that they don't listen to anything else, is represented in stocks like this, where they're up and away. Valuation doesn't matter. Mind you, the P&L is unbelievable. I think it's a scam, but it's unbelievable. So you cannot argue with it. The price to sales is single digits, barely double digit. Versus, like, for example, this P&L is 10 times cheaper than Palantir's P&L, and this one grows probably just as fast. just as fast, almost barely a little bit less than Palantir, but Palantir is 10 times more expensive, and it's not even a fraction of the size of this company. Look at these margins. My goodness, I think these are the best margins of all the mega caps, probably better than NVIDIA. Well, it's a contest. You know, NVIDIA has worse gross margin. Meta has better here, worse here, but that's amazing. So Meta is not expensive. It's just about the stock price action. And there's a lot of weakness inside this blue box. So if it approaches the lower thirds of the blue box, it should find heavy support. I would be comfortable doing an iron condor on it, where the iron condor is around the yellow box and all-time highs. So you would probably risk $350 to make 150. So risk reward is amazing. 150 divided by 350. So that might be something to do. Other than that, I wouldn't add to my longs. And if you want to nibble long, just make it 20% of what you intend on having. Probably. 3M were short and making a lot of money on it. I think I only sold call. Did I buy a put? I should have opened my account. Anyway, we are short and making money. I would leave it. If I sold a call spread, I would definitely leave it. If I bought a put and I want to scalp the win, in other words, if I bought a put and it's making me $50 per contract or $30 per contract, and that's a good win and I'd like to book a win, book it. If I did 10, maybe I book 7 and leave 3, or book 8 and leave 2. If I did 5, I'd close 4 and leave 1. That kind of scenario. The chart is still bearish, down a little bit lower. It can fall lower. I wouldn't buy the dip. MO, I would short it if you twist my arm. Crazy P&L. What's crazy to me is, how are these companies still legal to exist? If you had a car, if you had a company, please don't take this the wrong way. If you're a smoker, this is nothing against you. I have people that smoke in my family, and not my immediate family. That's a deal breaker for me. But the idea is, the products that they're known for are known to cause severe health problems. Why are they still allowed to exist? So will Kennedy put the pressure on smoking? I haven't heard him say that, but I don't know what part of the smoking company is Altria versus the other one now, but nevertheless, it is what it is. They do bring in the money. They do pay dividends, I'm assuming. So good, let's talk charts. The breakout from 54 pretty much delivered the easy money, and 56 is a sell zone. I think anything above 56, like that letter R says, is going to be difficult. So if I'm long as a trade, I'm out. If you're long because you see it breaking out from this one and going to 65 or 62, I see what you're saying. And if you have a good reason to be in there, fine. I think it dips before it does that. So, and if you lose 50, you probably go to 46. Yeah, you do have support at 49, but I think if you lose 50, you don't stop at 49. You go to 46, if not 45. So, you know, I don't think it has premiums. Dare I say I'm going to sell a call at the end of the year. If they do, I'm going to add it to my trade sheet somewhere just to look at it. I don't think I've traded Mo ever in options. A Mosaic I have, and then I put it on the do not trade list. Wait, Mo earnings, 65 days. Okay, good. I sold puts. Anyway, Mosaic back then. Mosaic has support and has resistance. It's falling, a descending channel. They're trying to place a bottom. They have tried before, and every time they've tried, it made a lower low. Now, wolf waves are basically when a stock descending wedge like these white lines that look like a pizza slice, they often result in a violent reaction up. In this case, you can see it go back up to 36.40. So don't buy a call like thinking of that. But if I'm long this stock, I don't mind it. In fact, maybe you would want to buy a lottery call if they're cheap. And I can think if they're cheap, like, you know, then throw $50 at it out in time. Solid base below. Pandemic lows below that. Sell put, buy call spread. Like if you wanted to own shares of 22 and you sell a put at 22 into the earnings, unless they say something crazy, that's not a bad idea, as long as you want to own shares. So it's a better long than a short here. acknowledging that there's headline risk coming. Who is this? Microsoft. Okay, speaking of pizza slices, that large blue rising wedge, I think Microsoft will be in the low 300s in the next few months. This rising wedge, this is a chart thing. It's nothing about the fundamentals. This is my favorite company. If you tell me you need to invest in a mega cap right here, right now, it'll be Microsoft. Stable, consistent, great money machine. Good P&L, good balance sheet, good leadership. But eventually those charts will break down. Like I bet you up here, nobody thought that it could come down from here down to 220, but it did. So the market always finds a reason to justify whatever they want to do. So this is a long-term statement. This rising wedge will break down, and the target will be along a path that may take it. The longer they take to fill it, the lower it goes. So as an investor, if I'm long, I'm not adding. If I wanted to be long, I nibble and leave room to double and then add some more on top of the double. That would be my behavior. And I could also condone selling a put to own share below, as long as I know what I'm doing with that. Call diagonals, like if you want to buy a leap call, partial position, I'm okay with that. Knee. Okay, you have support at 66. If it fails, you have backup support at 61. If that fails, you have support all the way through 50 and 48. I can say the opposite on the way up. Like it's going to take a lot to get out of 79. But if you do, you get a chance at challenging 86. And if you do that, you go to 100. I would bet against it. I think 74 is impossible to break through. Not impossible, very difficult to break through. Just as solid as the support is at 66. So you're stuck. Good support also at 69. Nike, inside of a resistance zone. They're deciding whether they want to break out again. I don't think they have it in them. I said let's buy the dip when it fell. Look at the wild earning reaction on the left. My goodness, that's Nike, like one of the most solid companies on the planet. Look at this. They're right in the middle of it. So there's nothing much you can do. If they take out 79, in theory, you can go to 84. So if you're an investor in the stock, there's absolutely nothing to do. Sell covered calls to put them to work. Annalie, I don't trade these stocks. Did you bring me this from another provider, another contributor? Because that sounds like something that two people I can think of love to trade. Didn't this company go to zero at one point? No, just 14. Okay. I think this is a dividend play. If you bought it for the dividend, you bought it for the dividend. Just make sure that you're honest about it. Like you should know that the government will lend you money. If you lend the government money, they'll pay you 4.6% short-term bonds. So weigh the pros and cons of that versus a company that pays 3.5. I don't know what they pay. Technically speaking, Annalie has resistance through 2450, has support through 18. So that's your immediate range. 1950, one could argue some support. Way better support below 17. It's a bargain as it approaches 14, of course. So anything below 16 is a good entry price. ServiceNow, seemingly unbeatable at one point, and then it gives it back. If you like this company, then the dip here could give you entry points if you know how to do it with selling. Okay, so I drew a box and then another box. It's falling into a support zone. That's the blue box, which extends through let's round up to 900. Okay, as you approach that, you should get a bounce. And the bounce can go to 1,000. And there's a backup support zone below it. So we have multiple potential buyers from here through 850, 840. Okay, and then back up below that. And the company's on rails as far as financials. I can tell you that it's pretty high, right? So it's not like bargain basement prices. It looks like it. But again, here, this is where I tell you, if you throw just a regression analysis, just a channel, a simple regression channel, let's see what it looks like. Okay, they haven't hit the mean yet. Reversion to the mean, right? They overshot and they're reverting to the mean, which is red-blue separation. So credit put spread will put you below the mean. That's much better than chasing with calls. Great company though. Buy the dip mode. It's not cheap enough for me, but it's definitely tradable. And if I'm long that company, I would not add ServiceNow. Energy. Earnings in 3 days, so whatever I tell you now is not going to matter much. I can tell you that if they beat 115, which is the fail on the left, they go to 122.23. Otherwise, they have buyers, and I'll mention the lines at 103. Actually, that could be target too. So 103, 100, 96 through 95, obviously. Anything below that should be a bargain unless they say something weird in their earnings. And you is a buy the dip moment. It's on my list that have not pulled the trigger. So that red W on my screen, I'm afraid they're chasing this yellow thing, even though that hasn't played out yet. I'm afraid they're chasing it. But this red W says it met target 1 and target 2 and perfectly. This where it is right now is target 2. Target 3, I'm going to eyeball it being 10.2. So it might lose another 70 cents. However, there's a conflicting scenario where it should bounce. So let's say we have a green week or a couple of green days. This one can find itself at 12 pretty quickly. So if you bought the dip for a trade, get ready to scalp it. Target 1 is 1240. Anything above 1280, I would be out for a trade. If I bought it at 1340, anything that approaches 13, I'm out, because then I get my money back. And you better not lose 10. I don't know why would it, but you better not. NVIDIA, earnings coming this week. Solid support. It's falling into solid support. I saw some people talking about 160. To them, I say, no way. If it goes to 160, no way, it's not going to get there. But if it does go there, which is possible, it goes to 180, 190. I don't think it stops at 160. So it's either testing 118, 116 again, or all-time highs in a big way and takes the market with it, and then I will short the market on that burst. Go back, stop this video, go back and watch the 5.5 minutes from last Monday night, the strategy video for last week, and you will see me drawing a little squiggle up that I will short on the market for us to just have another dip. That's the strategy, and I think this will be a trigger for it or against it. Solid support everywhere below here. There are levels at 128, 126, 124. Big one is 118. 126 also has become pretty important. 118, and then the old one was 116. So round numbers, but the whole zone is very supportive, because I had targets and we've met them already twice, and the fundamentals are solid. So I'm going to tell you something though. NVIDIA did the impossible, the company, with their financials. They did something I will never see again in my lifetime. Pretty confident about that. The stock did impressive things that I've seen before, but this one was unbelievable, right? On the way up. The opposite will happen on the way down on the stock if, and that's a big if, I don't know if it's coming or not. I think it's too soon. I think next earnings might be a challenge. If NVIDIA hints at a slowdown in the growth rate, if they say, hey, you've been used to us delivering 30, 40% growth, next time it might be 28. If they say that, I remember the days where they used to crush Amazon 30, 40% a year. When somebody says, oh my gosh, they're only growing 29%, they used to grow 33%, and they sell it. They will disappoint people. So be on the lookout for some stupid dips like that, which means if I'm long NVIDIA, I'm not piling in. I'm long enough. And if I want to get long NVIDIA, I want to build cushions. So let's say I wanted to buy it here, I wanted to buy 100 shares. I would rather sell puts into earnings when the earnings puts are hot. So come to me the day of the earnings before they report. We'll look at the clues and also if that's doable. Great company, buy the dip for sure, own it for sure. But don't chase it blindly because they're going to do well. I have no doubt they're going to do well. It's what they say that may move the company. And it will take the market with it. All right, OKLO, this looks like a bounce coming towards 46 and maybe 48. And then if they hit 50 and above, that's going to be difficult. Now, there's a chance that they cannot get to 46. And if they fail at 44, they might want to come down one more time to 34. So yes, there is a target, and I'll put it up there, but I think they might want to do one of these first. Target zone, I'll put it. That's what they're going for, but they might not be able to make it. Support zone will be here. Earnings in 2 days. Okay. Oracle. I am short Oracle, but it played out. Hit resistance and failed. I think I shared that trade with you. Sold a call spread, but it played out. Maximum gains achieved. If I bought a put spread, also, I would be out of it. Nothing against the company. I was just shorting the reaction. I think the earnings was ridiculous or something about it. I don't remember the particular. Great company, solid management. They rarely do stupid things, but they're stuck. You can see the resistance line. Anything above 174 is a short. Unless you take out 182, then we can talk about, okay, maybe they want to challenge 200. I doubt it. Anything below 162 should be solid support. 162 through 158. Now, if you lose 152, which should be only if the market corrects, then it would be a disaster from there. So if I sold a call spread and I made money, on the next rally, I'm going to put an alert myself. I'm going to say reshort. This is a trade versus an investment. Reshort for the next dip, maybe. I just want to revisit that concept. So if they pop, I may want to consider reselling a call spread or buying a put spread, but it has earnings in 18 days. I doubt I will have time. Oxy, I would have been out, just like I would have been long. Trade the range until the range breaks. So now I think it's easier to get down to 49.80 and 49.50 than it is to take out 53.40. We'll see. There's a lot of support below. Yes, there's an opportunity to break out from 53.20, but I think there's a bunch of sellers just waiting. If I'm long the stock anywhere 55, I would have exited at 53 or 52.5. Paramount, it's a short up here. It was a bargain down there. If it approaches if it approaches 10, get long for a swing trade. I think the fundamentals can hold it up. Now, okay, earnings in 3 days. Listen, it could be at 13. It could be back to 10. So if you're a fan of the stock and you're already in the shares, I wouldn't add for the earnings. If you want to get into the stock, I would sell puts if it falls on earnings, or if you're brave enough, sell puts into the earnings. I'm not that brave. Their player is crap. The programs are good, but the player crashes all the time. And so doable 13, yes. But doable 10.40, yes. Buy the dip, yeah. I'm not here to hold it into the earnings. Come to me before the earnings report and we can dissect the options. And with that, we end video 2.